Good morning and welcome. Patriot Radio News Hour. Joe and Jason on this Tuesday. Fighting a little throat something, but we'll get through it. It is Tuesday, the 14th of January, so we're almost halfway through the month already. As I said yesterday, this is going to be a busy week. It started today, but it really picks up steam starting tomorrow with the CPI inflation report, Jason. But the producer prices came in. It was lower than expected, but much higher year over year. The producer prices kind of bottomed out in December of last year. And this, again, a December number not as hot on the headline, which, hey, that's good news, right? Hey, that's something we'll take that. But unfortunately, all the other numbers inside of it, worse than, well, I shouldn't say worse than expected, but much hotter. Essentially, the producers said, hey, inflation's about doubled from where it was from a year ago, Jason. And again, I think that's what we're going to see. I think tomorrow, get ready. I have a feeling we're going to get a much hotter CPI number tomorrow. But today, at least for the producer prices, it could have been worse. So I'm going to call it good news because it could have been worse.
How much worse do you think the CPI will be?
I think we're going to see a big number. I really do. The New York, and let me tell you why. It's not a guess. The New York Fed, they do a lot of other things and release certain information. One of the things is their inflation expectations. That came out yesterday. And they're already saying, hey, they expect 3%. Got to remember, that was 2.6. So this is a big jump in expectations from the New York Federal Reserve. On top of that, and I don't know about this one, but, the University of Michigan survey, it's a pretty popular survey. Their inflation's expectation, that number came out Friday. We don't really talk about it because I'm like, you know what? It kind of changes a lot. There are going to be big changes month to month, and who knows who they're asking. But it hit inflation expectations in that survey. Hit the highest levels, going all the way back to 2008, which is shocking to me. I'm like, come on, really? That kind of was interesting. And then, of course, we got the payroll number Friday, right? That was a good number, so it leads me to believe we're going to see higher inflation. And again, crude oil, it bottomed out in December, but was rising. And I don't think the crude oil number, I think that's going to hurt next month's inflation number more than this month, but we may get a little bit in there. So I'm expecting CPI, unfortunately, to be high. And talking about, in that trend where what were these guys doing? You're telling us that you didn't want to cut rates until you felt like you had inflation under control. Remember that? People want to forget. That's what Jay Powell and his buddies were saying. And now they're going to come out, and it looks like they cut rates right as inflation was picking up. But we've been saying that all along. Listen, they can't control. It's a fallacy that they can control inflation with rate cuts and rate hikes. Now that the debt, maybe you could do it a little bit when the debt was small. Right? It was a more effective tool when the debt was small. Jason, the debt's not small. It's overloaded now, and we're seeing, at least I believe, we're seeing just how ineffective it really is going to be.
Year over year, CPI, September was 2.4. October 2.6, and November 2.7. So you think they're going to tip it over 3? You think there'll be that much momentum?
I don't be surprised. Don't be surprised if we see a 3. But and again, 2.9, 3. The biggest thing in this is obviously, 1 month. What did they say? 1 month is one thing, 2 months, okay. But once you get past 3 months, and now this would be month number 4 of continually higher numbers on the head, and that's just the headline number, right? That's not the core and all this other stuff, and the control group number and blah blah blah. And you got to remember, the good rule of thumb is whatever they say the headline is, double it, because that's probably what it actually is, right? Because they don't really report inflation, but it's going to be, like I said, it'll be interesting. I am counting on a much hotter CPI number tomorrow. And again, I think that's why today, when we look at the action today with this lower number, you would have expected the bond market to sell off a little bit. Maybe those yields would come down, right? Gold would be under pressure. Wall Street would be having a big rally. They're not. None of those things are happening. And I think everyone's waiting. Tomorrow's going to be a big day.
Last time we were below 2.4, which is the low number this year. The last time we were there, February of 2021, almost 4 years ago.
The good old days, right? The good old days. We'll be back. Patriot Radio News Hour. Joe and Jason here on this Tuesday. Our toll-free number, 800-951-0592. AllAmericanGold.com is the website. A quick look at the markets. It's mixed. The Dow is up 30 points. The S&P's down 10. The Nasdaq's down 42. Like I said, tomorrow, kind of D-Day, right? Tomorrow is going to be how high does it get? Anything under 3 on the headline, I'll call it a win. How's that? I'm being positive. Look at all this positivity today. The 10-year note, 4.79. So kind of just sitting there. It's been fluctuating this week between, say, 4.77 and 4.82. Right now, good news here, at least. Oil's down a little bit. India saying, hey, the new sanctions put on by the Treasury Department, kind of a going away present from Biden to Trump, it won't become a big deal till March. Then there's going to be a problem. And I kind of laughed. I'm like, okay, well, it's January 15th. March is right around the corner, but India said till March, so I guess, I don't know, gives a little reprieve. Right now, gold's up almost $10 here, recovering from yesterday, 26.73. Silver up 35 cents. I'm going to say it. I'll say it again and again and again and again and again. Buy some silver. Just buy some silver. Got U.S. Silver Eagles. We ran them on sale yesterday. Keeping them on sale today. I want you to get in here. Rolls of U.S. Silver Eagles at $720. Silver right now about 8 cents away from being back above $30 to the ounce. Remember, you need to get more diversified. I get it. I'm excited. Right? I think, listen, Donald Trump's going to do some good things. He really is. I truly believe that. The problem is all of those good things are going to be offset by things he can't fix. Can't. And here's the problem. They're going to be offset much bigger. Any good that he can do, the offset is bigger. See what I'm saying? There's no way out of this. And I said it all along. It didn't really matter who won. And people got mad. The Trumpers, don't be mad at me. I voted for the guy again. Come on, don't be mad. Let's be realistic. Do yourself a favor. Take part of that hard-earned money you've worked for and get more diversified. That's all I'm telling you. You got big IRAs, call us. You don't have to put the whole thing in there. Right? You got $1 million IRA, maybe, hey, I'm going to put 100, I'm going to put 200,000 in there. We can do it. What does it cost you? Nothing. Some paperwork. I think to set up an account, total, getting all this stuff, blah, blah, blah. And none of this for us. We don't charge any of these. It's like $500. There's no penalties. You don't have to pay taxes. None of that stuff. The only fee you pay, we provide the metals for you on your behalf. You can store them in Delaware. You can store it in Texas. I think there may be another one now. This is how funny it is. When I first started here, they were stored at HSBC Bank in New York City. All the IRAs, all of them. That's where they were stored. Remember 9/11 and where's the gold and all this stuff? Well, after 9/11, HSBC said, get rid of this. And really, here's what happened. Can I tell you what happened? The billionaires all said, well, we want the vaults. We want to put our gold in there. And they were like, yeah, that's way easier. Yeah, and they kicked everybody out. All that stuff got transferred to Delaware. And that's where the gold was. Now you can do it in Texas. You can do it in Delaware. I think possibly, and I'll check with Arlene. I think there's another, maybe Nevada now. Like, all these states are getting serious about this stuff. You need to as well. Call us. We can help you at 800-951-0592. But, Jason, I think the big thing is we're going to wait for tomorrow's number. We're watching now some of these nominees. Hegseth, this guy looks like it. That one's going to be a hard one, right? The defense pick, right? And we're going to see how together the Republicans can be. Kind of interesting. So we know, like Elon and Vivek, and they're saying, hey, we're going to cut all this money. And, they started at $2 trillion. Last week, Elon's like, okay, we're not going to be able to do that, but maybe $1 trillion. Yesterday, House Republicans, they had hey, here's what we think the most the United States could possibly do as far as cuts. But then they said, by the way, this will never pass. And that wouldn't even pass with the Republicans. The best they could come up with, Jason, was $6 trillion over 10 years. So that would be $600 billion. The problem was Medicare, Medicaid, and other things were going to have to be in there. Slashing welfare, revising the Affordable Care Act, of course, rolling back some green energy credits. But they said, well, really, by the way, it wasn't even $6 trillion, it was $5.7 trillion. This is how funny it is. They try to act like those two things are the same. That's a $300 billion difference, right? That's all of Elon Musk's money difference between those two numbers. But anyway, then they said, but hey, this is not to be viewed as any sort of a proposal. It is not something that we feel could ever pass. But hey, we're going to throw it out there as a reminder to everybody, don't expect a lot of cuts, because even to get this, which we're not proposing, it was almost like a waste of the piece of paper. There's no way for Medicare, Medicaid, and welfare to all take cuts and get it passed.
So it kind of sounds like somebody down the road could say, well, we did show you this thing months and months ago, and you guys just didn't even want to consider it. Sounds like a political football is what that's like. We're not going to do this.
Yeah.
This is why you even put it out there? Well, because somebody's going to want to have that as a feather in their cap down the line when things are blowing up. They're like, well, we did propose this thing that would have helped, but nobody even wanted to consider it. That's the only thing I can think of, Joe, right? Because there's a whole lot of stuff in Washington that gets thrown out there, and it never makes it to a vote because it's like semi-automatic firearms ban is introduced every single year. It's never voted on because it will never pass. They're just waiting. They're jonesing for that year where maybe they can do it. Probably when there's digital currency. But yes, that's what this is, Joe. So because here's the thing: even if they propose something that they want to even get close to voting on, once everybody else starts to look at it and they see that they're being cut here, or right, I'm not getting enough there, or hey, we need to have more money this year to even work. It'll get torn to bits, right? I mean, everyone needs more money now. So everyone needs more money.
It's sad, and again, I've warned you about Medicare and Medicaid in 2026. You already know there's going to be a problem there. That's why I think that was in there. And then, of course, on some good news, farmers out there, a lot of farmers been struggling. You're either, you know what I'm realizing in farming right now? You're either booming because you're in a spot where, hey, the weather was good for me, or you're dying, right? There seems to be no in-betweens, but there is a new report out from Ag America, so they kind of are big in the farming industry. Here's some good news. They're saying that they're hopeful that farmers can expect some form of relief, but it won't be till 2026, Jason. So, but at least somebody saying something positive that hopefully for the farmers out there that things will turn around. But the whole food system seems like it's broken. What's going on at the grocery store, you would think farmers would be killing it. And come to find out, it's almost the exact opposite. And they're saying 2025 is going to be another bad year.
Well, and look, food banks all over the country are at the worst they've been in since recent memory, right, Joe? They don't have enough. Everything that they're buying costs way more. I remember I just talked about the Denver food bank. The cabbage was $31,000 more expensive.
Yeah, right.
Just the cabbage, $31,000 more in 2024. So, and those lines are getting longer, right, Joe? Those lines are getting longer. So, it's just a bad situation. This is what inflation does, and when inflation starts to run away, or if it's let loose on purpose, because let's face it, they printed that money in 2020 on purpose. They shut down the country on purpose, and here we are, Joe. It's almost like they designed it that way.
Yeah, and then retail. So again, we're starting to hear from the retailers for Christmas. Signet Jewelers. This thing was not good, saying that the Christmas holiday was well below forecast. By the way, you're like, Signet, who are they? Let me tell you, 2,700 brick-and-mortar stores under the brand. K-Jeweler, Zales, Jared, Banter by Piercing, Diamond Direct, Blue Nile, James Allen, Rockbox, Peoples, Jeweler, Samuel and Ernest Jones. I mean, like pretty much all the different jewelry shops out there, they're really almost owned by one company. It's kind of funny here, saying that cash-strapped consumers only bought the cheaper holiday jewelry, the stuff that was on sale. They're down 24% in pre-market trading. And this is the thing that I worry about, because the stock market, every stock is priced to perfection. And when this comes in and it's not there, Jason, they just get hammered. What's coming next? My guess is going to be we're going to get a bunch of closings here from Signets, because the sales just aren't there.
Yeah, jewelry. I mean, that's a whole other thing, right? I don't buy a whole lot of it, but their markups, man, for an ounce.
The diamond market, even the Rolex market, right? They're all in the crapper, yeah.
And yet another signal, right, Joe? Because I'm not a big jewelry guy myself, but people love it, right, Joe? That's for some husbands, that's the only thing they can think of, right, for that anniversary. And the anniversary gifts are getting a little cheaper from what you just read.
Yeah, the big thing was that was it. Hey, what do you got on sale, right? What can I? How can I stretch my dollars? And I think that's kind of been the theme from the vast majority of the – now, we haven't heard from all of them yet, right? So there's still hope out there. But, again, I think – and I laid this out yesterday. The winners that going into this are going to be the winners coming out of this. And all of the losers, we're going to get more party cities. We're going to get more big lots. I mean, look at what Macy's and Kohl's did yesterday. Between the two of them, closing, almost 100 stores, and they want it all done in the first quarter. This is not going to be drawn out and protracted. When we get back, we got to touch on it. A new update in the fires burning in L.A., the amount of insured risk getting to the critical level. 800-951-0592. Joe and Jason on this Tuesday. $20 gold pieces. I mean, it's just such a great opportunity. $27.75. Tell you what, you want to buy 20 or more? $27.50. You got spot right at what? $27.71. $26.71. You can buy $20 gold pieces, $27.50 if you buy 20 or more. 1 through 19, $27.75. And then U.S. Silver Eagles, $720 today. Today is the last day on that sale price. Right now you're talking about, hey, you're going to save, it should be $735, really $740 because it's up another 30 cents right now. Rolls of dimes, $117.50. I mean, either way, make sure you throw some silver in with anything you're ordering right now at 800-951-0592. So, as we watch these fires, and here's what's so sad. This is affecting all of us. Insurance in this country is going to become much, much more expensive. Now, California, listen, they shot themselves in the foot. And this is what we're seeing. Here's the problem. It's just like healthcare now. They decided, well, gosh, you know, these insurance companies, they make all this money, which, yep, they do, right? Because, well, let's face it, what is the goal of the insurance company? The goal of the insurance company, right, is to collect more in premiums than what they have to pay, right? So pay out in claims, right? It's a pretty simple business. Well, years ago, California decided, and I'm not talking decades ago, it was like 8 years ago. Well, gosh, it's getting expensive for the working class people to be able to afford their home insurance. So let's try to do something, to make it work. And so what did they do? Well, they changed some laws. They limited what the insurance companies could do. Well, it worked out fine for the first few years. But now the insurance companies are like, nope, we're not doing it. Now, here's the problem. Apparently, the insurance companies didn't do enough of we're not doing it when it comes to this fire right now. So the first prediction, J.P. Morgan was $10 billion. That was like the first few days. Then they went to $20 billion. Now, remember what I told you. $10 billion, they're fine. $20 billion, a little nervous, still fine. Once you get north of $30 billion, we've got trouble. Well, today, Goldman Sachs insured losses now up to $30 billion. Of course, uninsured losses, as we know, right, is going to be even bigger than that. Wells Fargo, they said, hey, Goldman may be light. And here's who they noted. Allstate, Chubb, AIG, and Travelers. Okay, now they're not, listen, I'm not saying those guys are going out. That's not what I'm saying. But they're going to pay a heavy price. And listen, here's the problem. This thing gets worse. Like I heard the winds are blowing again. And, you know, if it gets worse than this, look out. But here's what they did say. Mercury General, remember we talked about them yesterday. And then a company, Cincinnati Financial, are most at risk. And right now, and again, I don't know a lot about either two of, you know, they're not big name companies. Those would be the two that I would be most fearful of. But, Jason, the realities are these insurance companies are going to make it up somewhere. And everybody can expect homeowners insurance, which has already went nuts over the last couple of years, it's going higher again in 2025, 2026. I don't know when it lets up.
Yeah, you know, the California fire aside, it was already going up. You know, it's nice to have, once again, it's nice to have something to point a finger at, right, Joe? Because this stuff was going to happen anyways. This many houses burning down should put a lot more strain and actually push prices even more. But it was already going up. Joe knows I had to search new insurance on my home because the company that I have is going to stop. They were going to stop insuring in Colorado. There's certain companies don't like certain states, you know. So Colorado is a hail state. So I think they took it on the chin for hail, and they decided to leave. I mean, some insurance companies are just not insuring homes anymore. Some are not insuring cars. Some are not doing health insurance. And so I had, I use a broker for the insurance. I called her up. I was like, look, we need to do the search, and she was on it. You know, she was 6 months ahead before the policy was up. She was looking around and. You know, mine went from $1,500 to my homeowner's insurance, $1,500 to $2,500. And I just started with this company in that year at $1,500, and from $2,500 they wanted to go to $4,500. And you know, we were talking yesterday, Joe, you know, how expensive some of those homes are in California. You know, $1.5 million is sort of an average, but if, you know, I told you in Malibu, we had $12 million homes were the low end ones in Malibu that burnt, and the high end ones were $75 million. What does it cost to insure some of that? I heard some people have insurance costs of $500,000 or $100,000 to $500,000 a year. How do you even, you know, you have a $75 million house? I guess you're paying $500,000 to maybe $1 million a year for insurance.
Well, yeah. So those types of houses are very expensive to insure. Like a lot of companies, they won't even do it. Right? It's too risky because of it. So, and again, it's unfortunate. But it is what it is. And again, yes, did California have bad laws? Yes. Here's the thing. We may be grateful that they did. Wait, what? No, seriously. Think about if California wasn't idiotic and let the insurers charge what they needed to. Think about how much more the insured losses would be, right? I mean, maybe we're looking at this the wrong way, right? Thank God California did it. Could you imagine if they were talking about insured losses of like $100 billion? I mean, that'd be insanity. So either way, it It's a terrible, terrible thing. But this is what inflation does. There's almost like it. You think you've risen it high enough, but yet, nope, it's got to be higher. 800-951-0592. Patriot Radio News Hour. Joe and Jason. $20 gold pieces, $27.75, 20 or more, $27.50. Silver, U.S. Silver Eagles on sale at $720. That's a $20 a roll save. That's $1 an ounce savings today. Right now, gold $26.72, silver $29.90. And right now, tomorrow's the big day. We're going to get the CPI number tomorrow. The expectations now, they're coming out, looks like 2.9 is the headline expectation number, Jason. So, again, everyone's expecting it to be higher. The question is, can it stay below 3% or not? I think that's going to be the key. That's what we're looking for. Any headline number with a 3 in front of it, I think will be considered bad news for Wall Street. But, if it can come in at 2.9, I think they feel like, okay, whew, right, we dodged a bullet. But, again, the problem is, look at what oil has done in January, right? This has been a power move in oil right now. I mean, this is crazy. So the Treasury Secretary, Janet Yellen, God, I told you that she was terrible. Well, this is how bad of a problem that she's caused. These ships that carry the crude, 130 of them essentially were forced to drop anchor because the West said, "Hey, if you take any of these ships, you're going to, we're going to be mad." And 65 oil tankers have dropped anchor off the coast of China and Russia since the sanctions were announced on the 10th. 5 of those tankers off the Chinese ports, 7 dropped anchor off Singapore. The Treasury, which imposed these sanctions on 183 vessels, as it's trying to stop the flow. These include 25 oil tankers that were stationed along various ports, including Iran, the Suez Canal, basically pretty much, all over that side of the world. That accounts for 10% of the global oil tanker fleet. Whoops. By the way, the price to now reserve an oil tanker that isn't sanctioned, it just went up a little bit. It's up another 20% now. The previous day was $26,000. Now it's $30,000. It seems to be rising almost every single day now. And again, India is saying it won't be a problem until March, and then something's got to give, Jason. So I think we're going to see oil now run into this thing all the way up until they figure out how to get oil. Listen, India and China are not going without oil. That's not going to happen.
So worldwide inflation, not just our numbers here, is that going to, will that push countries towards the dollar for safety, Joe? And if so, then wouldn't the war in Iran just shut down the Strait of Hormuz, and then you got your inflated oil prices? You got $100 a barrel, $120 a barrel, and more.
I mean, I don't know what it does, right? Do they run to the dollar, or do they run to? Well, you know what? This is why we've got to get rid of the dollar, right? It's stuff like this that started BRICS to begin with, right? Which is, hey, the U.S. keeps using these as weapons And now, look at, India and China. China's the second largest economy in the world. What is China? India's like, what, fourth now? Fourth or fifth largest economy in the world? They're only going to tolerate so much of it. But again, I think at the end of this is going to be very difficult. Like I said, for Trump, who I think is going to do great things. This one, however, right, this is just going to raise the cost to everybody in the world. We're not only are we giving ourselves inflation, we're giving everybody inflation.
Just seems to me if you squeeze off the oil, you take Iran and start a war there, and you squeeze the oil supply, make the price go up, it just seems like worldwide inflation causes especially the BRICS nation, maybe not Russia, but China and these other nations that need it and need a whole lot of it. Where are they going to go, Joe? Where are they going to go? Because all these other currencies are weaker than the dollar in a lot of ways. It's not going to. Whose currency stays strong enough to weather the inflation that comes worldwide, right?
It's going to be. I'll tell you what. It's going to be very, very ugly as we continue to watch here. The 10-year note back above 480. That didn't take very long, did it? The Dow now down 100 points. The S&P's down 20. The NASDAQ right now down 80 as everybody's kind of waiting for the CPI tomorrow. Gold's up 10, 26.73. 800-951-0592. Jason and I are going to wrap it up right after the break. 800-951-0592. Joe and Jason wrapping up this Tuesday, right? Remember, tomorrow going to be an interesting day. We're going to have that CPI report. How high is it going to be? And Bloomberg now saying that the uptick in inflation, is that going to limit the Trump tariffs? Now, this is something Donald Trump had denied. Remember the Washington Post last week? Trump denied. Bloomberg out today saying, hey, the tariffs thing, maybe they're going to go slower now. But this is going to be a thing. And again, Jason, one of the big things for Trump to do what he wants, the money raised in these tariffs, he was going to use to offset, the tax cuts and all this other stuff. And now all of a sudden people are saying, wait a minute, is this higher inflation going to force them to back off here? I don't know. It sounds logical, but then again, if they back off, then they're not going to be able to pay for all the other stuff they want to do.
Spending's just going to be out of control everywhere, Joe. That's all there is to it. We're in. When you have the inflation we've had, like I did the CPI numbers, we haven't been lower than 2.4 since the beginning of 2021. They could talk. You could talk about, they're really hoping for 2.9. Why are they hoping for 2.9? It's supposed to be zero. It's supposed to be zero.
Why were they raising? Right? Why were they lowering rates?
Yep.
The whole time they've lowered rates, inflation has gone higher every single month. And now finally they're saying, well, okay, we're going to take a break. We're going to take a break now but before that, remember, they said, well, we're not going to cut rates until we firmly believe we've got a control of this inflation. Jason, they really are powerless. Here's the thing. It's kind of like the tsunami, right? And, the tsunami, when the tsunami comes, what happens, right? First, all the water, right, recedes. And that's when you're going to find out the Federal Reserve isn't wearing any pants, and then it comes crashing down. Jason, I think this is what we're seeing right now, which is, hey, this whole we can control inflation and all this other stuff with interest rates. I think it's getting proven that's a bunch of BS.
Right. And Joe, you've been doing this a long time. It's funny how just people accept the way things are. They don't ever think, there was a time it wasn't like this. What happened to that? Why aren't we heading back in that direction? And it's simple. There's the haves and the have-nots, Joe. It's just happening at a blinding pace. People don't realize that all that money that was printed in 2020 and early 2021, a billionaire every day for 500 days was created. 500 days in a row, there was 500 billionaires created because of COVID and the way the economics of COVID was. Remember, Joey, on the Half 50 Cup of Joe, we played that piece from Catherine Austin Fitz talking about in 2019 they changed how the government can just have a second set of books that's in secret. You have secret books. That's what we got going for us, Joe, in Washington, D.C. Secret books. They're going to spend like crazy. Who knows what the Fed's going to print? Because they're not going to tell us for 10 years, are they?
Yeah, right. By the time we found out what they've actually done, it will be way too late. God bless everybody. Get that gold and silver put away while you still can. Jason and I, we're coming right back with the Half 50 Cup.